This mid-cap cable and wire stock has outpaced the market leaders, delivering an impressive 32.86% return in just the past month as of May 8, 2025. The rally isn't without reason. RR Kabel Limited has consistently posted strong results over the last few quarters, leading to a robust performance in Q4 FY25. Not only did the company beat market expectations, it also outperformed its peers in terms of year-on-year growth during the March quarter. While RR Kabel may still be smaller in scale compared to the industry leaders, its aggressive EBITDA and net profit growth stand out, driven by higher efficiency and a sharper margin profile, thanks to a strategic product mix. In a competitive wires and cables landscape in India, RR Kabel's performance sure stands out. But will the performance sustain or will it fizzle out? Let's find out. Welcome to Bottomline by Groww. I'm Radhika Bajaj. In today's episode, we will deep dive into the results of RR Kabel Limited and determine if the growth trajectory stands true to the test of time and what are the factors that could drive or derail it in the coming years. RR Kabel provides consumer electrical products used for residential, commercial, industrial and infrastructure purposes in two major segments, namely wires and cables, including house wires, industrial wires, power cables and special cables. The second segment is FMEG or fast moving electrical goods, including fans, lighting switches and appliances. The wires and cables segment remains a mature and well-established part of RR Kabel's business, providing a stable business. But the company's fast-moving electrical goods or FMEG division started in FY20 following the amalgamation of Ram Ratna Electrical Limited is still in its early stages and currently operating at an EBITDA loss. The wires and cables business contributes to a major chunk of revenue for the company, and as of the March quarter of FY25, this segment contributed 88% of the revenue. The FMEG business segment contributed about 12% to revenue. Both segments reported strong double-digit growth during the quarter. While the FMEG segment continues to report losses at the EBIT level, it is worth noting that the losses narrowed down from 19.4 crore rupees in Q4 FY24 to a loss of 9.1 crore rupees in Q4 FY25. Now, this positive shift is largely attributed to operational cost savings, indicating early signs of better cost control and efficiency. Before we dive into the key growth drivers, let's first understand how RR Kabel has steadily strengthened its balance sheet. Since FY23, the company has been consistently reducing its debt, bringing it down from 580 crore rupees to 290 crore rupees in FY25. Now, this is a clear sign of improving financial health and prudent capital management. However, the company's interest expenses have been on the rise in the past 4 to 5 years. Now, this is a point investors need to keep an eye on. Moving on to the Q4 FY25 numbers. The company's revenue from operations grew by 26.4% year-on-year, whereas gross profit grew at a higher rate of 34.7% year-on-year on account of the reduction in the cost of material consumed as a percentage of total revenue. In other words, better revenue growth has led to better operational profits. The company's profit before tax surged by 64%, driven by employee benefit expenses remaining flat year-on-year and other expenses rising by just 24%, well below the 35% growth in gross profit, reflecting strong operating leverage and cost discipline. RR Kabel recorded its highest ever revenue in both Q4 and FY25, driven by strong market demand. The company posted an impressive 15% year-on-year for FY25 revenue growth in the wires and cables segment, while the FMEG segment grew by 22% year-on-year, reflecting solid traction across both verticals. Looking ahead, the growth outlook remains promising. First, a major tailwind is India's infrastructure push. With a massive 143 lakh crore rupee investment planned between 2024 to 2030, a move set to significantly benefit the wires and cables industry and by extension, companies like RR Kabel. Secondly, the company has shared strong growth guidance for the next 3 years. According to the management, the wires and cables business is expected to grow at an 18% CAGR, while the FMEG segment is projected to expand at a faster rate of 25% CAGR. What's even more encouraging is the bottom line outlook. Management anticipates EBITDA to grow 2.5 times over the next 3 years, signaling confidence in revenue momentum and margin expansion. According to the Ambit research report, the FMEG segment is expected to improve operational efficiency and achieve breakeven, with the segment projected to turn EBIT positive by FY27. Thirdly, the company has planned a significant capital expenditure of around 1,450 crore rupees for its Waghodia and Silvassa facilities to expand capacity and support long-term growth. Now, these capex plans come at a time when capacity utilization stands at 65% for wires and 90% for cables, indicating that the company is gearing up to scale production. Lastly, the company has been steadily improving its debt-to-equity ratio year after year, bringing it down to around 0.1 times in FY25, a significant improvement from 0.4 times in FY22. Now, this reflects a much stronger and more resilient balance sheet. But is everything smooth sailing for RR Kabel investors? Well, there are a few risks to keep in mind. Firstly, RR Kabel has the highest export exposure in the industry as a percentage of total revenue. This makes the company more vulnerable to global demand fluctuations compared to its domestic-focused peers. Secondly, the stock is currently trading at a lofty PE multiple of over 40 times, in line with market leaders like Polycab and Havells. However, other mid-sized players in the wires and cable space typically trade at 20 to 25 time multiples. This means that if RR Kabel fails to meet the high growth expectations, investors could face a valuation derating, putting pressure on the stock price. So here's the big question. With such a strong Q4 FY25 performance, does RR Kabel truly deserve its premium valuation? What do you think? Let us know in the comment section. And for more such insights, don't forget to subscribe to Bottomline by Groww.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and/or other instruments traded on the stock exchanges.